Hello and welcome everyone to one more session by ACCA, where in today's video we are going to discuss about pay reconciliation. Pay reconciliation is a kind of balance sheet reconciliation that we do while performing our year-end activities, while performing our year-end closure, right? So, what do you mean by pay? Firstly, let us understand. So, pay stands for pay as you earn, right? Its full form is self-explainable. So pay is a system via which HMRC collects income tax and NICs from the employee's pay. Okay. What do you mean by reconciliation? So reconciliation is the process of comparing two records in order to ensure that the records are correct. Okay. Got it till now? We have different types of reconciliation, like we do bank reconciliation, we do credit card reconciliation, VAT reconciliation. So different types of reconciliation available to us. Then what is pay reconciliation? So pay reconciliation is when we compare our records, the liability as per our accounting records that we are getting in the year end with HMRC's website, the filing that we have made for the pay liability, we need to compare it with it to ensure that our records are correct and accurate. Okay. So in today's video, we are going to discuss about a practical example of it. We always do cover a practical area for every topic. So yes, we have got covered this one as well. So if you are liking our content, you are finding value in it. Before we start, I just wanted to say, because you do not do it yourself, I need to always say to you. So you can like our content. Okay, you can share our channel or subscribe our channel. Okay, so that we get encouragement to make such kind of videos. Okay, and please do watch the full video. It is really interesting for you, and you will get something to learn here. Okay, this is available nowhere for you. Okay, so let us start here. So let me share my screen. Here we have Demo Firm Limited. Here we have working paper of Demo Firm Limited, which has a year end of 30/9/2025, which means 30 September 2025 is the financial year end of Demo Firm Limited, right? We have got the closing pay balance as per book. So this is my ending TB. Okay, this is my ending TB balance, that is 1008.58 is my trial balance reporting our pay liability, right? What we need to check now, is this 1008.58 truly correct? Okay, is there any change in it? How we got to know this? We are going to compare it with the HMRC's record. Okay, so before we go into the pay reconciliation, we need to understand the payroll. Okay, so we have got a payroll of one employee. So our tax year is from, uh, keep in mind for this video, our in this video, no, every time keep this in mind. Every time we have got tax year from 6th April to 5th April. Okay, so uh our accounting is from October to September. Okay, from October to September we have got 12 months here, right? Okay, sorry. Okay, so our year end is in September 2025. The yearly salary of the director. So here there is only one employee who is the director of the company. He takes salary of 24,000 pound, right? 24,000 pound. We pay him every month 2,000 pounds. So his annual salary is 24,000 per month. That is his gross pay. Okay. In over and above, we are going to talk about how do we calculate the tax liability. So as you know, we have got bands in UK. We have different bands for different level of income. So if I talk about the income tax for 25-26, you have got personal allowance till 12,570. From 12,571 to 5270, you have a basic rate. And then after your higher rate and additional rate at 40% and 45%. So our salary is in the range of 24,000, right? It is 24,000. So we would be applicable for 20% rate. But we do have personal allowance firstly. So personal allowance needs to be deducted from our gross pay before calculating our tax liability. So how do we calculate? So this 12,570 personal allowance is for whole 1 year. We need to calculate it for per month, right? Okay, so 1047.5 is the per month allowance that you are getting. So you get 2,000 minus this one, and on which you are paying 20% tax. Perfect. So have you got it? 190.5, 190.6 I have taken. As of now, I have taken 1048, right? As of now in the example, right? Here you can see. Okay. Okay. Next is NICable gross. We have NICable gross. What do you mean by NICable gross? NICable gross is something on which we do calculate employee and employer NIC. So for employee NIC also we do have different rates. If I could show you the bands, we have primary threshold of 12,570. So till 12,570 again it is 0%. After that you have to contribute 8% till 5,270, and after 5,270 you have a 2% rate. So again, we would be falling till main rate band, right? Till main rate band, right? Again, the same calculation, 1047.5 would be deducted, and you would be having a tax rate of 8% above the primary threshold, right? So I've got 76.24. This is our net pay. How do we calculate net pay? So from gross pay, we deduct the tax and employee NIC to get our net pay. Next, next is when we go to employer NIC. Now, here is where you need to be careful of. So, employer NIC, for employer NIC, we have got some rate changes during our current financial year. So, till March 2025, it was this one. Okay, if I could show you. Yeah. 9,100 was our secondary threshold. So, till 9,100, you had 0% rate. So, if I calculate it for months, it would be 758.33. Correct? Okay. So how do we calculate it? 2000 minus 758.33. We got a rate of 13.8 percentage for it. But now here are some changes from April. From April, you would see that employer NIC is changing. Why it is changing? Because the secondary threshold has reduced from 9,100 to 5,000. Okay. And the rate has increased from 13.8 percentage to 15 percentage, right? So if I get the monthly limit of this 5,000, it would be 416. Okay. So I've taken this as 417, rounding it up. So 2000 minus 417, we have got 15 percentage of it. So this is how I have got the calculation. So this is how the payroll works for one of the employee. Now, one of you might wonder that why there isn't any employment allowance here. Okay. So employment allowance might have reduced the overall pay liability for you. But since here we have got only one director, okay, who is the only employee, we do not get employment allowance, right? Okay. So what do we need to do? What is our pay liability per month? From October 2024, we have a pay liability of 438.19. So how do I get the pay liability? This plus this plus this. Okay, 438.19. What we are going to see is that mostly what you do is you do not pay the same month salary in the same month, right? For August salary to be received, you might receive it after you might pay it. The pay liability you would be paying after 1 month, right? So mostly in the year end, 2 or 3 months of pay liability might be pending. Okay, we need to check that. Okay, so these are the payments that we have made. These are some of the payments that we have made. So 504.29 is month one pay liability. Okay. So from 6th April to 5th of May, this is our first month. Okay. It is as per the next year. Then we have got second month, that is 6th May to June. Okay. Above that, these are all being paid. I'm talking about the, because we need to only consider some of the payments that might not have been made. Okay, till the year end, right? We need to consider that if the liability is correct. So we are going to, I have taken this SS of these last few months, right? Okay. So in the next month, we have got a liability of 507.26. Okay. So you might be wondering, here it is 438.19. How do you why are you paying for 504.29? But here the employer NIC was increased, so our total liability was 504.29. Okay. So this page shows you the type of charge and the tax period, the charges, credits, and payments. Credits, if you have any SMP credit or any SSP, anything credit on your account. Okay. Then you have payments, and then you get the amount due. Okay. So now here you can see the charges and payments. The charge was 504.19 as we reported, right? we have paid this amount. In the next month, in the month of June, we have paid 507.26. Why it is so? Why it is so? Because there is an interest part. Yes, there is an interest part. Okay. Why HMRC might charge you interest? Because you might uh, pay the pay liability late, okay, because of the late payment or the late filing of your FPS or EPS, right? In the period of 6th October to 5th November 2024, it was 1.21 and 1.76 for 6th May to 5th June 2025. That is the interest that we have incurred. Here you can check in the HMRC's website. This is how it looks like. So in total, it was 2.97 as our interest. We have paid it together in this month, in the month of June. Okay. So, since there is an interest that we have paid, we need to book an entry. The entry would be you would be debiting the interest and would credit the pay liability because it is increasing our pay liability. We have paid 507.29 instead of 504. So, if you not record this entry, then you might be doing some error. Okay. Yes. Now, this have been paid in July 2025. Okay, we paid this in July 2025, right? So there is no case that the amount is still pending till the year end. Okay, we paid it in July 2025. Our year end was 30th September 2025. Okay, so till year end we have cleared the payment, so we do not have any open liability. We have created the expense and we have also paid it, right? So no need to worry about the interest. Next are the payments. This are few of the payments. So what happens is I have paid this month's liability, that is for September month. I have paid in October and sorry, for August month I have paid in October, and for September month I have paid in November, right? We have got here 2 August and September month is in our year end, right? So when you close the year end, you would see the liability as 504.29 and 504.29. Okay, you would see this liability. But since you have paid this in October 2025, okay, this is after your year end, you need to check is the liability matching the total at your year ends. Okay, so this 50, if I show you, so this 504.29 were being paid after the year end. Okay, this was paid on October 25 and this one was paid on November 2025. So is my accounts reconciling? So if I show you 504.29, 504.29 into 2, these are the two liabilities that we have still got to pay after our year end. So 1008.5. So when we are preparing it, we see that during October and November we have paid, we have made a payment, right? But till our year end, it stands our liability. Okay, so 1008.5 was our closing as per books. And after the year end date, we have paid the same amount of money. So we do not have any difference. Okay, at the end, we do not have any difference. We are going to pay this thing, but after the year end, we are paying this thing. So we would need to have a liability being recorded here. So yes, this was how we do pay reconciliation. So this was a short and crisp video for you to understand how the payroll works and how the pay reconciliation works, where you compare your records with HMRC's filed records and you check if you have made payments after the year end, if there is any interest that you are paying after the year end. So that would again be uh, appearing on your closing pay liability. Okay, so these are some of the points that you need to consider. You need to know what are the threshold. You need to ensure that you are charging the latest rate in the current financial year. That is, you have threshold of £5,000 per year, and the rate is 15%. Got it? Okay. So this one was our video summarizing pay reconciliation. If you have any further doubts, you can comment out. We will answer your queries. Any specific requirement from you to make a video, we are always ready for you. And also, I wanted to announce that we are starting ACCA podcast where we are going to meet with people like in different field who have verged into different field after completing their qualification. Either they are student, they have achieved something great, or they are affiliate, they are ACCA member, and how their experiences are after that. Okay, so we are considering them. You can comment out if you are interested. We will answer. We will have a response to you. We will have a podcast, and we would be questioning you on few things which could help other ACCA students as well. So yes, this was it. Thank you so much for joining, and bye.